Alright, for this video I want to go over a sample form Illinois 1040 for the 2022 tax year. So this taxpayer we have here is a full year resident of Illinois, so they're filing a resident income tax return. So we've got their Illinois return here, which we'll go through in full. And we've also got the taxpayer's form 1040, which is important because you need your 1040 to be completed before you start the state return, because Illinois, like a lot of states, uses your federal AGI as the starting point. So we'll go through both of these returns, and then I also have one slide here just covering the fact pattern that we're going to be going through, and then some notes on some specific Illinois tax issues. So the fact pattern we've got here, we've got Adam, taxpayer. He's a single filing taxpayer and full-time resident of Springfield. He works full-time as a marketing consultant, and his federal W-2 shows wages of $84,000 for the year. That's box 1. And he also made a $3,000 pre-tax 401k contribution to his employer-sponsored retirement plan. Now his W-2 also shows that his Illinois wages were $84,000, and he had Illinois state income taxes withheld of $4,158. Now on the investment income side, Adam has a U.S. bank account that earned some regular interest income of $100. He's got a brokerage account that paid some qualified dividends, and then he's got some short-term and long-term capital gains and losses. Now he also invested in this Florida municipal bond that paid him interest of $47, and he's also got some U.S. treasuries that paid interest income of $75 during the year. For health insurance, he's covered by a high deductible plan at work, and he put $1,000 into his HSA. And as far as itemized deductions, he's not going to have any, so he's just going to be claiming the standard deduction on his federal return for 2022. Now, some Illinois-specific things here. Illinois does follow the federal tax treatment for 401k contributions, so you are allowed a pre-tax deduction for the amount that you contribute to that retirement plan. And that's worth noting because there are some states that don't, right? So Pennsylvania, for example, is a state that doesn't allow you to deduct the 401k contributions for state tax purposes, but they also don't tax any kind of distributions from it when you retire. So, something unique about Illinois is they will allow you this deduction, but they also don't tax the distributions when you do retire. So you get the best of both worlds with Illinois. Now, HSA contributions, Illinois also follows the federal treatment for those deductions, which is nice. So no adjustments needed there. And in contrast, for example, California does not allow HSA deductions if you contribute to an HSA for state tax purposes, that is. So Illinois is pretty good on this front. Now, municipal bond interest is interesting. So muni interest generally exempt from federal income taxes, right? But a lot of states might tax it depending on your state of residence. Now, Illinois is unique in that they just tax all municipal bond interest, whether it's an in-state or out-of-state issuance, unless the Illinois legislation specifically provides for an exemption. So not all of Illinois bond issuances are going to be exempt from Illinois state income tax. You have to check the list to see specifically what's being excluded. And you can find that in Publication 101 has a good list there, and then obviously also the Illinois Administrative Code has a list. Now, the personal exemption for Illinois is $2,425 for 2022, so we'll get a deduction there. And then as far as character of the income, capital gains, qualified dividends, all of it is just taxed at ordinary at one flat rate. So there's no changes in rates depending on what the type of income is. Illinois residents just pay a flat 4.95% on what is going to be your Illinois net taxable income. All right, so let's have a look at Adam's 1040 first. So we'll go through the 1040 just to highlight a few things, and then we'll come back to the Illinois return and see where some adjustments are being made. So we've got Adam's his federal 1040 here. So we've got his wages up top here on 1A, and then the investment income. So the Schedule B, we've got the U.S. bank account interest, the treasury bond interests. Remember, treasuries are subject to federal income taxes, but not state income taxes. And so we'll see an adjustment there on his Illinois return. the qualified dividend income there. And then the federally tax-exempt interest, that municipal bond interest from Florida, is reported in 2A. We've also got the capital gains and losses reported on Schedule D, right? And so that net amount is flowing through. The negative 66 in loss is flowing through to his 1040 as well. And then we've got the $1,000 HSA deduction reported on Schedule 1, and we've included the Form 8889 to show the $1,000 contribution and the deduction for federal tax purposes. All right, so if we have a look at the Illinois return, at the top here, we've got his Social Security number, date of birth, year of birth rather, and then full name, and then street address. Filing status is single, right? So same as federal. And then step 2, when we get into the income, you see here the starting point is your federal AGI from your 1040. So $83,359 is Adam's federal adjusted gross income on line 11. Right? And so Illinois, a lot of states have this kind of presentation where you start with your AGI from federal and then make the adjustment. Some other states want to see all of the income. They want to see what made into or what went into creating this AGI. So New York, for example, would do that. But in this case, you use your federal AGI as a starting point, and then we have to make adjustments up or down to whatever our base income is going to be, depending on what is deductible or what has to be included in our income. And so the first one you see there on line 2 is the federally tax-exempt interest. So the municipal bond interest from Florida doesn't meet any exemptions, so it is taxable in the state of Illinois. So we have an addition there where we're adding back that tax-exempt Florida interest. So our total income is going to be $83,406. And then we are taking a subtraction for the treasury interest, right? So states are not allowed to tax U.S. Treasury interest, so we have a subtraction of $75 there, and that's coming from Schedule M. So if we jump down to Schedule M, this is a more comprehensive list of all of the additions and subtractions that you could make to your income. And so in step 1, we have the name of the taxpayer, the Social Security number, and then we just find the piece of the schedule where we enter that Treasury interest. So on line 22 here, we see U.S. Treasury bonds, bills, notes, saving bonds, and other U.S. agency interests, and there's the $75. So remember, $75, taxable at the federal level, not taxable for Illinois, so that's why we have this subtraction. Okay, so we've got our subtraction there. Now our net Illinois base income here is $83,331, and now we can account for the exemption. So the exemption available per person is going to be $2,425. So Adam here is unmarried, so he doesn't have a spouse, nor does he have any dependents. So he's just claiming the one exemption. So his net income here for Illinois purposes is $80,906. And so the tax, very straightforward here, line 12, we can see that if you're a resident, you multiply line 11 by 4.95%, and then round off to the nearest whole dollar. So we have the $4,005 there. Now he doesn't have any credits or anything like that to be accounted for, no other additional taxes like household employment taxes or anything like that, and no use taxes on any out-of-state purchases. This is a big one that a lot of states are chasing their residents for, potential use tax that you could owe on out-of-state purchases. In this example, Adam doesn't have any of those, so he doesn't owe any use taxes. Jump down to page 2 of the Illinois 1040. And we've got, we're taking into account all the credits. So the amount of Illinois income tax withheld that was on his W-2 was $4,158. And then as it notes here, we need to attach Schedule IL-WIT. So once you account for the withholding, this is the amount of tax that Adam is liable for. This is the amount of withholding that he had come out of his paycheck. So he actually gets a tax refund because he was over withheld. So the $153 is going to be the overpayment, and he's just asking for it to be refunded to him. So on line 37, he's indicated that he wants to have it refunded to him, and he's asking for a paper check. If you want it by direct deposit, check box A, and then enter the routing and account number, and then indicate what type of account it is. All right. Now, if we look at Schedule WIT, this is really important. You have to complete these and attach the support in order to be able to verify the withholding amounts, right? So Schedule Illinois WIT, we've got the withholding records here for Adam, the W-2 that was supplied by his employer. So if you have a W-2, form type is code W, right? So the very first one up there. The EIN for the employer, and then fill out the federal wages column, the amount of Illinois wages, and then the Illinois income tax that was withheld, right? And obviously, if you have multiple W-2s, then you would fill in, you would complete multiple IL-WITs, right? As it notes up here, right? So if you have more than 5, complete multiple copies of this schedule. So, okay, so that covers it for this tutorial. I hope that was helpful. Pretty straightforward for this taxpayer. If you have any questions, please leave a comment below, and I look forward to seeing you again on the next video. Thank you.